Welcome to Fisher Webinars. The following is a recording of which pulp and paper markets are truly global, originally recorded on Thursday, March 9, 2017.
Today we're going to talk about global markets and which of the pulp and paper segments really are truly global. We talk a lot with clients about this, and one of the things that we hear from clients is talk about globalization, increased impact of trade for the products that they make, and so we thought we would examine this a little bit. And as we started doing that, we found some things that caused us to have some questions. One of which is, why is it that some pulp and paper grades are traded between regions so much more regularly than others? And of course, there are a number of factors that influence the movement of goods around the globe. And one of them, for instance, is a pretty obvious one. It's the availability of natural resources required for production of a particular product. And another significant issue is transportation cost, and really more specifically transportation cost in context of the total value of the product. Another thing that influences this is home market operating dynamics. So the relative strength or weakness of a producer's home market certainly can have some influence on their incentive to export products. Currency valuation obviously is a big one, and a topic that gets talked about a lot for the past couple of years. So we're going to talk about these factors and maybe a couple of others today as we explore this issue. And one of the things we'll also do is think about how we can perhaps put this in the context of discovering where there might be some new opportunities for international trade in the industry. But today I'm going to use a few terms, and let's just make sure that we're all on the same page as to what those are. I'll talk about intra-region trade, and obviously that is just imports and exports between countries located in the same region. So for instance, shipments between Germany and Finland or some other European country. Inter-region trade is shipments between regions. So for instance, shipments of product from Germany to the United States. And then we'll talk about domestic trade, which of course is just shipments of product within the country of production. So stuff that, for instance, would just stay within Germany. Now, this first chart actually was kind of surprising to me when I looked at this. Let me explain what we're looking at here. So the y-axis is exports as a percentage of total production, and the blue bar is paper and paperboard products, so paper, packaging, tissue. The reddish bar is pulp. The x-axis is time. And what surprised me is that we see that exports as a percentage of production for pulp and or for paper and paperboard grades actually peaked about 10 years ago or so and has been on the decline since then. Now, pulp expresses probably the pattern that I think I would have expected to see going into this, is that it continues to become a more significant factor, a more significant part of production. So the idea that globalization has been increasing, I don't know that this chart dismisses that, but it certainly is interesting that if you think about trade as a percentage of production for paper and paperboard, it's actually gone down in the last several years. Now, this is a very busy chart, but we're going to come back to this concept and to this way of thinking several times. So let me just take a second to explain to you what we're looking at here. So the y-axis is the percentage of shipments, and each one of the bars is a particular grade of pulp, paper, or packaging, for instance. And I've divided the bars into parts. So the blue bar is the percent of shipments that stays within that country of production. So these are domestic shipments. The reddish part of the bar are intra-region shipments, so shipments, for instance, within Europe. And then, of course, the gray bar then are inter-region shipments. And the reason I show this up front is because this is that question, right? Is, well, why is it that some of the pulp and paper grades demonstrate such different patterns of inter-regional trade or truly global trade? There's a big difference between some of these grades. Well, part of this can be explained pretty simply by the availability of raw materials locally. And so let's dig into that a little bit. Here, I've just selected 3 fiber grades. The upper left-hand chart is bleached softwood pulp. And the way to read the chart is the y-axis here is the percent of imports, and the bar is divided into where those imports come from for each one of these regions. So for instance, for bleached softwood pulp, any imports in North America are coming from North America. So for instance, this is just cross-border trade between the United States and Canada. Europe, similar picture. Most of the imports in any European country are coming from some other European country. Some's coming from North America, of course, mostly Canada. You look at Asia, it's a different picture, right? There's almost no intra-regional trade of bleached softwood pulp, and that's because there's just not a lot of raw materials for that. This chart's pretty easily explained by the fact that softwood trees grow abundantly in North America and Europe. Same story on this chart on the right-hand side. This is for bleached hardwood, and as you would expect, you look at trade imports in Latin America, you'll see that most of the imports are coming from some other Latin American country. Same thing in North America. And again, that's because Latin America has large hardwood plantations and the trees grow really fast. OCC, I put this in because I think it's really interesting that we do consider this, we should consider this as a raw material or a natural resource. And what's pretty striking about this, if you think about the percentage of imports here for OCC, if you look at North America, almost all of the imports are coming from within North America. There's a little bit that comes from Europe. Europe, almost any import that's going of OCC within Europe is coming from some other European country. But of course, in Asia, it's just the opposite. Almost all of the OCC comes from outside of Asia. And that's driven really by this availability of natural resources, is that we have these large consumer markets in Europe and North America where things are shipped in a box, and then those boxes are available for collection. That becomes OCC. So the takeaway from this slide is that sometimes products have to be moved from where they're made to where they're needed, because where they're needed, there's not the raw materials available to produce the products there. Now, another reason that's pretty obvious that some products are traded more than others is that some of them just don't travel very well, like tissue and towel, for instance. So again, same type of chart, percentage of shipments here. Blue is domestic shipments. And you'll notice the chart is dominated by blue. Some intra-region trade in Europe, but this could be shipments just across border from Germany to Austria, for instance, or some connected countries within Europe. Now, there's very little inter-region trade, and I don't think that surprises anybody. And really, what we're seeing here is that transportation cost as a percent of the value of the product, because the product is so light, finished product is so light, are prohibitive. And so it really prevents those products from being shipped very far at all. In fact, most of the trade that you see in towel and tissue are parent rolls. So it's parent rolls coming off the end of the machine that's being shipped to a converting location that perhaps is across the border of another country. There is almost no trade in finished tissue and towel products, again, because they're so light. Freight just makes it very difficult, very expensive to ship them very far. So that's pretty clear. So let's go back to our first, this particular view again, and think about, well, why is it that some grades are traded so much more than others? And let's drill into an example. So here in the center of the slide, you see two different grades, test liner or recycled liner board and Kraft liner. You'll notice that there's almost no inter-regional trade of test liner. Nearly 0 tons are shipped between regions. Now, if you contrast that with Kraft liner, about almost 20% of the Kraft liner production is shipped regionally. So why is that? Why are there so few tons of recycled liner shipped or exported compared to Kraft liner? Well, let's dig into that. Part of it is because of what we see on this chart. Now, this is a cost curve for test liner. Cost is on the y-axis in US dollars. These are just manufacturing cash costs at the mill, no freight involved here. And the roll-up is just at the region level. So each one of these bars represents the aggregate or average total cost of production to make test liner in that particular region. The width of the bar is the volume of test liner that's made there. And what jumps out at you is you see there's not much of a difference between the lowest cost and the highest cost. There's only $45 difference in the average cost between regions. Now, of course, mills within these regions will display quite different cost patterns, and so the differences between individual mills can be a lot larger. But when you think about it in aggregate, this cost curve is pretty flat for product coming off the paper machine. But let's think about how we distribute that, or how we might distribute that product around the world. So this is a busy chart, so let me try to explain it. What I've done is I've taken cost curves for 4 different regions. So this one in the upper left-hand corner of the slide is test liner delivered to Berlin. And what I've done is I've just grouped the mills by region, right? So the green are all Asian mills, European mills, Latin American mills, and North American mills. And since we're delivering it to Berlin, I struck a line at about the midpoint of the cost curve for European producers. So we'll say that's sort of the benchmark or the target for others coming into the region. And what you'll notice is that there are no Asian, European, or Latin American producers that could deliver product to Berlin below the lower cost producers from Europe. If we look at a cost curve for China, similar thing, similar methodology, struck a line at the midpoint for the Asian producers of test liner. You'll see there are some European and maybe a few Latin American producers that could be competitive, but not very many delivering to China. Same story for North America. This is delivered to Philadelphia. This is delivered to Sao Paulo, Brazil. So what we take away from this is that when you add freight, it makes most of these trans-regional shipments less competitive in foreign markets. So what I think about this is that what this tells me is that test liner producers have what I call a home court advantage when you think about global trade. That because of there's not much of a difference in cost off the end of the machine, and what difference there is taken up by the freight required to deliver that product. So now let's look at Kraft liner production. So most Kraft liner is made in North America. In fact, almost all of it's made in the United States, but about 30% of it is produced outside of North America. Now, the production from the United States, almost all of it stays within the United States, so it's domestic shipments. But there's a significant portion of it that is exported, and most of what is exported globally. It's exported interregionally. So let's take a look at the people who are importing Kraft liner. So this is a chart that shows the tons of imported Kraft liner per year by country, and it's divided into where it comes from. So what you see here is that Germany gets most of its Kraft liner from some other European country, or most of its imported Kraft liner from some other European country. Now contrast that with Italy, and you'll see that more than half of Italy's imported Kraft liner comes from outside of Europe, comes from overseas. In fact, almost all of Italy's overseas supply of Kraft liner comes from the United States. So let's take a look at why that might be the case. This is a cost curve for Kraft liner. Each of the bars is a mill making Kraft liner. I've divided it into where that mill's located. Green's Asia, same theme here. And what you'll notice is struck the line, the midpoint on European producers. These are American producers. Really none of the American producers, U.S. producers, would be considered low cost delivered to Rome. So why would Italy import Kraft liner from the United States if there are lower cost tons available from some other place in Europe? Well, it's a matter of availability. There aren't enough lower cost tons available to meet Italy's demands, and let's explore that a bit more. So it's not like Italy can just say, well, just ship me all the product that I want. Italy has to compete with Germany and every other country for Kraft liner that's made in Europe. So this chart on the left shows the destination of Kraft liner exports from Europe. So it's Kraft liner that's made in Europe and then exported somewhere. More than a quarter of it goes to Germany. Another third goes to some other European country. Here's Italy. About 8% of it goes to Italy. Now, if we look at the chart on the right-hand side, this shows the origin of Kraft liner imports by Italy. So as I said earlier, a bit more than half comes from outside of Europe, and almost all of that comes from North America. So it's a question of the United States makes a lot more Kraft liner. It is it's more available, and there's not enough available made in Europe to meet all of the demands there. So that is another explanation for why that Kraft liner travels across borders. Okay, let's dig into another particular grade and have a closer look at this and do some more in-depth analysis. And for the next few slides, we're going to talk about coated mechanical papers, or in the U.S. we call this coated groundwood. Now this chart shows the largest paper and packaging grades. There's no pulp on here. This is just paper and packaging grades. And broken down by the percentage of shipments where they go, right? So most container board that's produced stays at home. What you'll notice is this coated mechanical has a quite different trade pattern. It is the most widely traded of any of these larger product groupings. A minority, something on the order of about 25–30% of coated mechanical is actually shipped within the borders of the country that produced it. Most of it is shipped outside that country, and a large portion of it is shipped to another continent. So let's explore this a bit more. These are the 4 largest producing companies of coated groundwood, coated mechanical: Finland, Japan, Germany, and North America, or I'm sorry, United States. And the chart shows the percentage of the flow of goods broken down by what stays domestically, what goes as exports inter-regionally, intra-regionally, and then we have the imports. And just visually, you'll see that the patterns are very different. For instance, nearly all of Finland's production leaves the country, and much of it leaves the continent. So you'll see there's very little in this purple bar that stays within Finland. Of the 2.4 million tons that they make, almost all of it is exported. Now, if you contrast that with Japan, Japan makes just a little less, about 2.3 million tons of coated mechanical. Almost all of it stays within Japan. There's very little import or export of the product, so a pretty closed system, self-contained system. Now, Germany is kind of a mixed story here. So what we see, again, similar production, 2.2 million tons of coated mechanical. There's not a lot of it that stays of German production that stays within Germany, but there's a lot that is imported from other European countries, and there's a lot that is exported to other European countries. Much smaller amount of inter-regional trade. So interesting, these tons are traded pretty freely within Europe. Now, if we look at the United States, about 2 million tons of production, you'll see again, most of it stays within the United States, but there's kind of an equal amount of intra-region imports and inter-region imports. So the U.S. is a net importer of coated mechanical papers, and the source is kind of equally distributed from Canada and from outside of North America. So pretty interesting differences in the trade patterns of these large producers. So a question that comes from this, when you think back to Germany now, is could companies outside of Europe gain some of Germany's business, of Germany's coated mechanical business? There's a lot of imports, but most of them are coming from other European countries. Well, let's take a look at that. So this is a cost curve that shows the total cash cost for coated mechanical papers delivered to Berlin. And each of these is a mill, and I've colored those mills by where they're located. And what you'll see is a lot of red in the first quartile, which are European mills, but you also see some green and yellow, which means that there are Asian and North American producers who could deliver coated mechanical papers to Berlin and be a first quartile producer. So why wouldn't they do that? Well, the question is whether those companies could make higher margins selling in Berlin than they could make selling at home. And that may be the case even for some of these who aren't first quartile producers. Perhaps you could have some second or third quartile producers who might ask that same question. So let's explore this. So let's assume, for our discussion here, that prices for coated groundwood, coated mechanical are on the floor. Now what we mean when we say they're on the floor is we have seen that markets tend to demonstrate this phenomenon called a floor price, and that floor price typically falls at about the midpoint of the fourth quartile of production. That's the point at which producers out here are better off shutting down their machines than they are to continue to produce the product. So typically prices will not fall below this floor and stay there. Market forces will just push them back up. So if we assume that prices for coated groundwood in Tokyo, for instance, delivered to Tokyo, are on the floor, we would set that floor price level about right here. These are all Asian producers, by the way. Now, if we look at the same cost curve, but now it's a European cost curve. So it's prices delivered to Berlin, and these are all European producers. The floor price is much higher. Just think of these lines sort of as reference points. If we go back to this one, you'll notice how much higher the floor price in Europe is than it was in Tokyo. Well, what that suggests is that the higher floor price in Germany might allow some Asian producers to divert some of their shipments and cover that additional cost. And in fact, we went on to measure that and found that that could be true for some. So this chart shows the margin dollars per ton. So again, just definition, margin is simply the difference between the selling price and the landed cost. So cash cost plus transportation. And each one of these is a mill. The blue bar, these are for Asian producers. The blue bar is their margin shipping product to Tokyo, and the red bar is their margin shipping product to Berlin. And because that higher price that's available to them in Berlin, if both markets are on the floor, these particular mills, although they're in Asia, would be more profitable shipping their product to Berlin than they would be shipping it to Tokyo. So if prices are on the floor in both places, it's possible that you could see an incentive for Asian producers to divert some of their shipments, therefore increasing the amount of trade we see in that particular product. Okay, so what about exchange rates? I get this question a lot. We think about this a lot. Do exchange rates affect global trade? Well, it seems intuitive to say yes, but we ought to look at actual patterns to see if that's the case. A couple of years ago, we did some work and actually did a webinar about exchange rates, and we said this could be a disruptive force in our business. This was back at the time when the U.S. dollar was really starting a significant strengthening run that has continued since then. And we said this is something that we ought to investigate a little bit more. At the time, we used coated free sheet or coated wood-free trade between Europe and the United States as an example of what might happen. So let's go back and look at that analysis and see what actually did occur. Well, here it is. So let me explain the chart. The y-axis are import tons per month of coated wood-free coming from Eurozone countries into the United States over time. The right y-axis is the US dollar to euro exchange rate. So the higher the bar here, the stronger the dollar. Now what you would expect is to see always movement like this, that as exchange rate, as the dollar is strengthening, imports are going up, right? That's what you would expect to see. But if you look at this since over the last few years, that's really not what's happened at all. Coated free sheet imports into the United States have been pretty flat despite this huge change in the strength of the dollar. Now what I've done is I looked at several different time period lags. This is actually a 6-month lag, so this is the exchange rates 6 months earlier than this point. Our thought is that there was no way they could probably move perfectly together concurrently, so May to May, so we looked at a few different lags. This is actually a 6-month lag. But this statistic, this R squared, for those of you who are statistics people, this is the coefficient of determination. Essentially, this just tells us how much of the change in imports can be explained by the change in exchange rates. And the answer is not very much. So this is very low R squared. So this is probably surprising to a lot of folks on the call. Now, if we take a longer view and we go back to 2002, we see that the relationship between imports of coated free sheet, coated wood free into the United States from Eurozone countries versus the US dollar to euro exchange rate is still not very strong at all. It's a little bit stronger, but certainly not statistically significant. You see some periods when the two series moved as you would expect them, but others where they moved just opposite, and then we have this period of flatness here. So not a strong relationship at all from a statistical standpoint. Now we have some more data that kind of paints this picture as well. So this is a chart of coated free sheet, coated wood-free demand in the United States over time. And I've divided the bar into the source of the supply. So this blue part is production less exports, and the red part are imports. And what you'll see is that 2016, the share of imports in the U.S. coated free sheet market actually went down from 2015. Now, the longer term average here is about 19%. So the average of these red bars over this 10-year period of time is 19%. So we're pretty close to the average, but really no different than when the dollar was much, much weaker than it is today. So odd, to say the least. Interesting. But maybe this is part of the explanation. And I realize this is hard to see, but I tried to get both of these on the same slide. I pulled this from the most recent SAPI financial report. SAPI, of course, is a leading producer of coated free sheet both in Europe and in North America. And what we have seen is we've got a couple of different charts here. They've indexed, these aren't actual prices, they're indexed to the price in 2008. These are coated paper prices in the United States. These are coated paper prices in Western Europe. And this might give us some clue. When we drop this line on here, when we see that today, from an index standpoint, this line where the price for paper in Europe is above where the index is for paper prices in the United States. So if this suggests that prices relatively are higher for coated papers in Europe than they are in the United States, that serves to explain why we haven't seen more imports of coated free sheet paper into the United States. It's because European producers enjoy a higher margin staying at home, certainly when considering the added freight burden. So this may be a clue as to why we're seeing that pattern in coated free sheet. Now, I looked at this for many different grades, this relationship between exchange rates and imports. So I looked at data for imports of several different products into the United States from the Eurozone since 2010. Uncoated wood-free or uncoated free sheet is the only grade that shows what I would consider even close to a statistically significant relationship. This is the coefficient of correlation. So what I showed you before was R squared. This is R. So if you squared this, you'd have the coefficient of determination. You'd have that R squared. But the point is that there's not really strong relationships between any of these grades and exchange rates over time. That caused me to scratch my head, and so we thought a lot more about this. We've analyzed this a fair amount. Here's another view to where we've said, I mentioned this lag factor, that well, perhaps it just takes a while for changes in exchange rates to have an impact on imports or exports for that matter. This chart tries to address that. So this is for all paper grades, imports into the United States, and this is the US dollar weighted index. So this is a basket of all currencies that just kind of gives you a sense of the overall broad measure of the US dollar strength. I've lagged that change in exchange rates by 2 years. This is a 24-month lag, and you'll notice that they move fairly well together. The R squared here is 0.65. So that's beginning to become pretty statistically significant, but I had to lag the exchange rates by 2 years to get to that point. And it just seems to me that it's unlikely that such a long delay in the impact of exchange rates really reflects reality. Okay, well, so do exchange rates impact global trade or not? Well, statistical analysis of the data suggests that they really don't have much of an impact in the near term. And I realize that that's counterintuitive, but the data is pretty clear on that. This long lag that we found where there is an impact just strikes me as a bit unlikely. So think about how that would have to work. What that would mean is that if rates seem favorable for imports to the United States today, as they do, does that mean that we're going to see higher imports 2 years from now, regardless of what the rates are then? I don't know. That seems to me to be a bit unlikely. So we think there are other factors that are at work here, and we're continuing to study this, and we'll continue to work on some modeling and look at what other issues might be contributing to what really is a pretty complex phenomenon. So stay tuned. We'll get back with you as we get more information on that. So what we've seen is that trade in paper and paperboard, exports of paper or paperboard as a percentage of production, have actually gone down in recent years. Pulp continues to go up. That was a big takeaway. We also see, and we've shown why the case is, that some grades of paper are just more suitable for global trade than others. And we showed that some of that's a factor of, well, where are the natural resources located? Transportation costs are a big influence on that. And that imbalance in local supply and demand, if I am a producer in a country where my operating rates are really low, I have a greater incentive to try to find a home for my production, and so I'm more incentive to look for exports. And then another factor is, well, where can I make the most money? if the relative price is higher in another market than it is in my home, I have even greater incentive to export those products. The big takeaway also is that exchange rates just don't really appear to have that near-term impact on global trade that I think many folks in the industry believe that it does. And we're going to keep looking into that for you, so stay tuned, and we'll get back with you as we come up with some more information.